Hey everyone, welcome back to the channel, your number one source for income-oriented investing. In today's video, I will review SPYI, the NEOS S&P 500 High Income ETF. This is a US listed ETF, and a lot of my American viewers have been requesting and asking that I do a deep dive review of this ETF. So we'll do that together. So we'll see and figure out what this ETF is all about. Obviously, this channel is all about high yield, income-oriented investing. So by the way, if you're American, it's your first time here. Yes, I do cover mostly Canadian funds, but I also cover US high yield funds as well. So please consider subscribing to this channel. So what will I cover in this video? Well, let's review this ETF in detail, but I also want to figure out and compare this ETF to JEPI. So JEPI is a very popular S&P 500 cover call ETF as well. And right now SPYI is outperforming JEPI. So let's try to figure out why it's doing that together. We'll check that out in detail. We'll compare it to JEPI. And after that, at the end of the video, I do have a special announcement, which I think you'll enjoy. So let's get to it. All right, everyone, let's quickly review this ETF together. So it's SPYI, that is the stock symbol. Expense ratio at 68 basis points. Not bad, not high at all. A little bit higher than JEPI. We know JEPI is 35 basis points. Distribution yield, well, the frequency is monthly, so that's good. Distribution yield is 12.29%, so it's about 1% a month. So what is this ETF? Well, it's a S&P 500 covered call ETF with a small twist. So let's just read it here. So the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 and implementing a data-driven call option strategy, right? We own the S&P 500 and we sell call options on it. Actively managed, seeks to take advantage of tax loss harvesting opportunities. So this has to do with taxes, tax efficient distributions. This is not my specialty as a Canadian, so I'm going to skip over this. But looking at the distributions and how they're taxed, the big majority is return of capital. By the way, if you just click on distributions here and click on the details, you'll be able to see that. So here's the key part. I want to try to figure out what makes this different from a JEPI. So the fund utilizes a call option strategy that may include both sold and purchased SPX index options. So there's a key difference. So SPX index option, SPX is the S&P 500. So may include both sold and purchased. So they sell a call option, that's to make the premium, but they might also buy a call option, an S&P 500 call option, which may provide the opportunity for upside capture in rising equity markets. So that's kind of the difference. JEPI, I don't think they do that, right? They just sell an out of the money call option and that's it. So this really is the main differentiator. And if you actually scroll down, I paused it at the right moment. There's a little video here that kind of explains how this ETF works. Let's take a listen because it's very important and it's very revealing.
First, NEOS purchases all of the securities in the S&P 500. Then, a call option strategy, utilizing SPX index options, is implemented, where a short call is sold to generate option premium.
So they're selling call options on the S&P 500. That's how they're generating the option premium here.
This premium is used in two ways. A distribution is made back to shareholders as income on a monthly basis. And when market conditions warrant, the additional premium may be used to buy an out-of-the-money call to potentially capture upswings of the underlying assets.
That's the difference, right? So they write or they sell a covered call on the S&P 500 SPX. Part of that distribution is given out to shareholders, but sometimes they say when market conditions apply or could apply or whatever they said, they might buy an out of the money call option on the SPX as well with a portion of that income, which means if you're buying a call option, you think the S&P 500 is going to go up. So that is the main difference with JEPI. And another very important difference is that if you click on holdings, you'll actually see literally the S&P 500. So this is S&P 500. They're writing a call option. They don't really say if it's an out of the money or at the money. My estimate or my prediction is going to be that it's slightly out of the money, actually going to be very close. What do I mean by that? Well, here's SPX. If you just Google SPX, this is the S&P 500. So if right now, today, I would be selling an at the money call, the strike price would be 43.66. It would be at the money. So you're essentially making the biggest premium possible, but you're giving up the entire upside of the S&P 500. If you're doing it at 43.75, 43.80, that's out of the money, right? So you're capturing a little bit of upside, but your premium is going to be lower, and obviously the higher the price is, the more out of the money it is. So I have a feeling that they're riding slightly out of the money. Why do I say that? Because it seems like they're generating about 1% a month consistently, right? That's another thing. If you look at sorry about going up and down. If you look at the distributions, they've been very, very consistent near the 47, 46, 47, 48 mark. Now, this ETF is not even a year, it's out. It came out at the end of August 2022. But if you look at even the 2022, you can see that the distributions are very, very, very consistent at about 1% a month. So if you're selling at the money S&P 500 calls, you're actually making more than 1% a month. How do I know that? Because XYLD, one of its competitors, sells every month, does a rinse and repeat. They do at the money calls. And if you look at this document here, you could actually see the potential option premium that you get by selling at the money call. So it's way, way, way higher than 1% a month, right? You could see that here, all 2%, 3.6. They've been going down lately because volatility has been going down, but at the money calls gives you definitely more than 1% a month. So I have a feeling that they are selling slightly out of the money calls. So they're making maybe a little bit more than 1% a month with premium. But if they feel the market is going to go up, they're going to buy an out of the money call option. And what that does is if the S&P 500 goes up like it's been doing, they could make more money, or it could grow the fund even more. So let's take a look now at the performance compared to JEPI, because it's very interesting, and and then I'll tell you what I feel are really the two key differences between SPYI and JEPI. All right, everyone, fund performance of SPYI. So it hasn't been a year that it's out, but we'll check out the year to date, the 1 month, the 3 month. We'll compare it to not only the S&P 500, but JEPI as well. So here we go. So market, we're not going to look at NAV. We're going to look at the market price for both JEPI and SPYI. So right here, you have 1 month, 1.3. JEPI, 1 month minus 1.74. There is a 3 month. 3 months, 6.8%. 3 months for JEPI is 2.82. Year to date for JEPI is 2.32. Year to date, 10.32. So SPYI is definitely outperforming JEPI right now. And not only that, it's been outperforming the actual the S&P 500, which is pretty much the holy grail of investing. So I have to say, anything that beats the S&P 500 without leverage and a much higher management fee, which this one has, right, 0.68. If you just get the S&P 500, it's like 0.03 or 0.04. It's very impressive. So I have to say, commend SPYI or NEOS. I mean, this obviously seems to be a winning formula. If you look at the stock price, you could kind of see the same thing. Last 6 months, plus 2.95%. Of course, don't expect anything crazy. This is a covered call ETF. A lot of the return is going to come from the income, obviously, if you're getting 12% yield. But if you look at JEPI in the last 6 months, it's minus 3%. So that brings us to the $1 million question. Why is SPYI outperforming with a higher management fee than JEPI? JEPI is 35 basis points. This one is 68 basis points. Well, I think it's two reasons. Number one, like we already discussed, the covered call strategy. So JEPI does not, I think they don't buy any call options, right? They just sell an out of the money call option on the S&P 500. And that's basically it. So what that means is that JEPI is going to capture less upside or less growth or less total return if the S&P 500 is going up, which it has been. So that's factor number one. But I actually think the biggest factor is the holdings. So one thing you guys got to remember is that JEPI is not really the S&P 500. It only has about 130 stocks. It doesn't have 500 like the S&P 500. If you look at the top holdings here, you see Adobe, Amazon, Microsoft, MasterCard. Where's Tesla? Where's Nvidia, for example? And you see that it's pretty much kind of equal weighted. It's not like Microsoft is way higher than Progressive, which is much lower on the scale in terms of assets on the S&P 500. SPYI, if you look at the holdings, it really is the S&P 500. You have Apple, Microsoft, Amazon, Nvidia, Google, Tesla, the highest, it's the highest weighting. So, and I have no doubt that if I download the full holdings here, you'll actually see all 500 companies. So that is really, I think, the key difference of why SPYI has been outperforming. It actually has everything in the S&P 500, and recently the tech stocks have been exploding. So that's definitely helped SPYI compared to JEPI. So my opinion here is that JEPI is going to be more conservative, more defensive. It's more of a defensive product. And I think that if the S&P 500 is doing really well, SPYI is going to continue to beat or outperform JEPI. But I think if the S&P 500 starts going back down and there's a lot of volatility with the tech stocks and maybe that the tech bubble bursts, JEPI is going to start outperforming, especially because it has a lower management fee. So it's kind of like a play on the S&P 500 in a different way. JEPI a little bit, definitely a lot more conservative, a lot more defensive, because it actually does not have all the constituents of the S&P 500. SPYI does. So that's what I feel are really the key differences. So can I say one is better than the other? Well, if you look at performance in the last 6 months, obviously SPYI is outperforming JEPI, but I don't feel that there's anything that's better. One is better than the other. I don't look at investing that way. It's not black and white. It's all subjective. It's all what the investor wants. So if you're more optimistic, if you're more bullish on the S&P 500 and you're an income investor, SPYI is probably going to be better for you than JEPI. But if you're a more conservative, pessimistic, defensive investor, JEPI is probably going to be better for you. So I hope this review was useful. Of course, remember, these are just my opinions here. I'm predicting a lot of stuff here when it comes to the premiums and all that. And keep in mind, if you're newer to the channel, if you're American, I have a bunch of JEPI videos, including a Q&A with the guy, the main portfolio manager who manages JEPI and JEPQ. Very amazing video. Hamilton was awesome. If you're interested in these types of funds, I always try to interview the fund managers, and JP Morgan has been the most high profile interview I've done on this channel. So make sure to check out this video where I review JEPI and JEPQ in detail, plus do a Q&A. Same thing for the Global X ones. I talked about XYLD a little bit. Again, I do a Q&A with the income portfolio director at Global X where we talk about QYLD, RYLD, XYLD in detail. I also have a review video. The main difference with XYLD, by the way, XYLD just writes an at-the-money call on the S&P 500 every single month. They distribute a portion to the investor and the other portion gets reinvested into the NAV, by the way. And in case you're American, I do have a playlist. So I have a playlist called US listed funds designed for high yield and passive income, where I cover only American listed funds. So that's the best way. If you're American, you don't want to see any of the Canadian stuff, check out this playlist. Keep in touch with this playlist. And what's a special announcement I had? Well, guess what, everyone? I reached out to NEOS and they agreed to do a Q&A with me. So I'm going to be arranging and figuring out a time and date where I'll have hopefully the fund manager or a main person at NEOS, and we'll review. I'll ask him all the questions and really try to confirm everything I told you about the SPYI. So stay tuned for that interview. Very exciting. See you next time, everyone. Hope you enjoyed the review. Don't forget to leave me a thumbs up, and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the Ultimate DIY Investing Package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the Elite membership. If you're interested in the Elite membership, and even if you want to start out with the free membership and upgrade to the Elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the Elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.